So today we're going to look at, how to trade smart by using support and resistance to make profit, generally in the forex market. Okay, I want to get to know my viewers. So I want you to indicate if you are either a beginner trader or an intermediate trader. Just type in the comment section if you are either a beginner or intermediate. So let's go. Here, if you're a beginner, type beginner or type B. If you're intermediate, type intermediate or type I. Just want to get to know my viewers. Okay, Stanley is intermediate. Thank you for that. Yes, another person. Tell me, talk about, are you beginner or intermediate? Okay, Temitope is intermediate. All right. So we're waiting for Apollonia. Sorry, Apollinia, pardon me. Don't worry, more people will still join us. They are taking their time. So we'll have to get started all the same. So Apollinia, are you a beginner trader or intermediate trader? Okay, I think maybe Apollina uh is not online or something. We'll get back to that later. So let's
I'm
just
online.
you're online. Okay, so I was
I'm a
waiting for your response.
beginner.
Beginner, thank you, thank you. That's great. So let's start. So now, one of the concepts that can help you become profitable in trading is the concept of support and resistance. Now, I remember when I started trading, I didn't know this concept and I really suffered a lot for it until I understood the concept of support and resistance. And that, it's one of the things that changed the game for me as a trader. So I can tell you that it's a concept that works and is one of the foundational concepts of technical analysis when it comes to forex trading. So what's a support? What do you call support and resistance? So we say that support and resistance are likened to floors and ceilings in the market. That is price floor and price ceiling in the market. You can see the writing, in the uh, manual I'm reading from. So they are likened to price floor and price ceiling. Support is an area on a chart that price has dropped to, but struggled to break below. Take note of that. It's a level, is an area on the chart that price has dropped to, but struggled to break below. And resistance is an area on the chart that price has risen to, but struggled to break above. Now, I underlined those words. So we say that support and resistance analysis is an important part of trading because it can be used to select trading opportunities, where to buy, sell, where to take profit, and where to cut losses. And that's why one of the ways to trade smart, which is the title of this webinar this afternoon, is how to trade smart using support and resistance for profit. Because I tell you, that's just as simple as it is. It will help you to trade smart in the forex market. Now, let me break it down a little bit further. Now, we talk about support and resistance. We can view price in this way. If you throw a ball up, the ball will go up to a certain level where it will stop mid-air, the force of gravity will act on it, and it start dropping. In other words, when price is trending up, it goes as high as to a level that we call an overbought level or an overbought zone. That means price can go so high. That in trading, there's nothing like price going there, I think doing that forever. No, because like I always tell my students, what we trade in the forex market is actually the change in the exchange rate of the currencies of different countries. So what you are seeing on the chart is actually the economy of a country. So the chart will keep going up forever, neither will it keep going down forever. It will always go up a little or go up for a while, retrace, go up higher later, or drop. So when price goes up, it gets to a level when it becomes overbought. Overbought means it has bought so high to such a level that it will not have enough capacity or strength to go beyond that level. For example, 2 years ago, our exchange rate in Nigeria hit 2,000 naira per dollar. Now, that is the highest exchange rate we have ever had in Nigeria. Now, if that exchange rate had continued beyond 2,000 naira per dollar, I tell you, our economy would have been in serious trouble. Even at that 2,000 naira per dollar, inflation was very high. Now, that was an overbought level. Now, usually when price gets overbought, the next thing that happens is that the central bank will have to come up with a policy to stabilize the economy. And that is what happened in the case of Nigeria. Price got overbought at 2,000 per dollar. Then the exchange rate, the central bank came in and the price, there was a policy from the CBN which adjusted the price. It's entered into a retracement mode. So when price hits overbought level, then what will happen is that most likely there will be either a retracement or a reversal in price. A second, please. Apologies for that break. So when price hits that overbought level, overbought zone, the next thing you expect is a retracement or a reversal, in price. So here you can see on the screen, we have the resistance up there. So price trends up towards the resistance. Like we said, the resistance can be identified as like the ceiling in a house. All right, sorry for that little break. I had to just attend to something very, very important right here. All right. So when price hits that overbought level, the next thing we expect is a reversal to the downside. So the resistance is representing that overbought region from where we expect a reversal to the downside. That's why we say that the resistance is an area on the chart where price has risen to but struggled to break above. It's like in a building, you have the ceiling. It could be a decking. When you throw a ball to hit that ceiling, the next thing is that you expect the ball to reverse to the downside. You know, that's what you expect. Now, the same thing, the support. The support is an area on the chart that price has dropped to, but struggled to break below. So the resistance is above, the support is below. So anytime price hit a resistance, we expect a reversal to the downside. Anytime price hits support, we expect a reversal to the upside. So in trading, as a technical trader, one of the key things we do is to identify support and resistance level because it can help us to know where to make entry, where to set take profit, and even where to set stop loss on our trades. All right, let's proceed further. Now, we want to look at why must you use support and resistance level? Is it so important for us to use it? I will say yes, very important for the following reasons. One, these levels are the same levels that banks, large hedge funds, and other major players place their orders. So you are not the only one using these support and resistance levels. Banks, big banks, Bank of America, Bank of Japan, they all use this, support and resistance level. Even large hedge funds, JP Morgan and the likes, they use this support and resistance level as one of the key tools to identify price movements in the market. Number two, it helps in picking the best entry, take profit, and stop loss levels for a position. You know, Support and resistance, as I've seen people ask the question, especially beginner traders, sometimes intermediate traders, they ask, how do I know when to buy? How do I know when to sell? Very simple question. And the answer is simple. Look at selling around resistance area and look at buying around support. And also the same level can help you to identify not just the entry, but you can set take profit and stop loss using the same concept of support and resistance. Three says because these levels are levels where the market has proven in the past to have interest for buyers or sellers, meaning at support areas, the number of buyers generally exceed the number of sellers, which push the price back up. So the resistance area is actually a seller's zone. At resistance, which is the one above, we are looking for price to reverse to the downside. So there are a lot of sellers waiting for price to hit a resistance from where they look at an opportunity to sell. I'll use Nigeria as an example again. When our exchange rate hit 2,000 naira per dollar, a lot of people knew that anything beyond that level, the economy of the country will crumble. So we knew as analysts that price will crash. So some people who are analysts or traders, manual traders, could look at selling at that point because they expect price to drop from that high price level. So we say that meaning at support areas, the number of buyers exceed the number of sellers. But at support, that's the one below, the number of buyers. Why are buyers more than sellers at support? The reason is because the price is very cheap. In normal day-to-day transaction, everybody likes to buy cheap. The same thing when it comes to the market. We'll buy when price is cheap. So at support area, the price is very, very cheap. For instance, if you just wake up tomorrow and you see that our exchange rate dropped to 1,000 naira per dollar, I can guarantee you that a lot of people will go and buy physical dollar and keep, because we believe that over time, price will still appreciate you to still go to 1.5, 1.7. So you want to buy very cheap. And it happens. Other commodities also. People make profit from buying cheap and selling high. The same thing applies even to the financial market. So we say that as support areas, the number of buyers generally exceed the number of sellers, which pushes the price back up. And at resistance levels, the number of sellers exceed the number of buyers, causing price to go back down. So support and resistance, still looking at it, these are levels at which a lot of traders are willing to buy or sell a currency pair. If a pair is currently downtrending and will come into a level where there are a lot of buyers in the market, this level is called support. If a pair is trending up and will come into a level where there are a lot of sellers, this is called resistance. Okay, I think we should just move further. How do you use support and resistance? Or better still, how do you identify support and resistance levels? Now, that is what this particular module is all about. Now, this diagram I'm showing you is a perfect scenario for support and resistance. Though in real life, it may not work exactly like this, but then this is what we have to use since we're doing, online training at the moment. Now, this is how price moves. When price, let me use another color for the pencil. When price trends up, we say it makes a high. It gets to a high price. Then you can see a downward trend, and the next thing we see price move up a second time. Now, how do you identify resistance? A resistance is formed when price makes a second high and price closes on the same level as the previous high. This is one, this is two. So if the candle of the second high closes on the same level as the candle of the previous high, that means that price is sustained at that level and will not break above it. So from that point, we expect the possibility of a reversal to the downside. Let me give you an example. I'll use Nigeria as an example again. Now, do you know that when next price gets to 2,000 naira per dollar in Nigeria, we don't pray it happens. But if for one reason or the other it happens, the exchange rate is 2,000 naira per dollar, that level is going to form a resistance zone, and there's a possibility for a retracement. Retracement means temporary movement of price against established trend. There will be some drop, even if it will continue beyond it later or is an actual reversal. There will be a market reaction because price is getting to a level that is on the same high as the previous high. So now we have an established resistance between point 1 and point 2, and you can see the red arrow indicating price is dropping. Now price drops low, and there is a previous low here also with a current low. I'll label it again 1 and 2. Now, because price did not drop below the previous low, the second low also forms a support from where we can look at an opportunity to buy again to the upside. Now, these arrows are indicating trading opportunity, like a signal where you can place a buy or a sell trade. So if you have always asked the question, how can I use support and resistance to buy or sell? That's exactly what I'm showing you on the screen. Now, when price makes a third high, because the candle also closed on the same level as the first high, the second high, now the third one, that means the resistance level is now getting established. So from there, we expect a reversal again to the downside, another sell opportunity to this new low, which I will label as 3, forming a confirmed support where price has touched the same level 3 consecutive times. Now, again, price bounces off from here, but on the fourth count, price breaks out above the previous resistance level. and makes a new high. So we have a new high up here. Then price drops low. Now, price is making a new low. But then this new low is on the same level as the previous high, where price has touched that resistance level 3 times consecutively. Price is now back to that same level. Now that gives us a new concept. What is the new concept? The new concept is that when price breaks a resistance and makes a new high, it drops to the same previous resistance, it retraces to the same previous resistance, and now forms a support. So we have the concept that resistance can turn to support. And the opposite of it is that support also can turn to resistance. So what we have now here is a scenario of a resistance turning to support. That's why you can see the arrow here now is a green arrow. So instead of selling, which has happened earlier on when price got to this level, now we're looking at buying. So it becomes a buy signal from this point upwards. Again, price goes up to the previous high, so what do we call this? We call this 4 and we call this 5. So it goes to this new high, forming another resistance from where price drops low to form a new low, which is still in line with the previous resistance. So it's still a case of a resistance turn support from where we can look at an opportunity to buy. Now, as a trader, this is how price moves. Price hits a resistance when it touches the same level a second time. From that second touch, you can look for an opportunity to From that second touch, you can look for an opportunity to sell. The same thing when it touches the support the second time, you can look for an opportunity to buy. On and on, like that. That is simply how we can identify support and resistance, and also the scenario where resistance turns to support. But then I'll show you in subsequent slides how support also can turn to resistance. All right, so this is another scenario we need to look at. Just a second, please. And respond to Joshua. All right. Sorry for the little break. I had to attend to something here. So now, the scenario we're looking at here is, sometimes when you look at charts, you will see rectangle boxes being used to represent support and resistance. Why do we do that instead of just using a straight line to represent support and resistance? Now, if we use the horizontal line tool to represent support and resistance, it means we're seeing support and resistance as a round number. Like for example, when our exchange rate hit 2,000 naira per dollar, that was a round number. But then there are some other times when the high or the lows are close to each other, but not exactly the same figure. So we can round up in such a scenario to have a support and resistance zone. At that instance, we'll not call it support and resistance as a line, but as a zone. For example, if you look at the screen now, you can see in this scenario here, we have a high, we have a second eye and the third eye. Now, this eye and this eye, they are not exactly the same figure, but they are very close. Now, this second one is still somewhat close to this other one. So we now drew the rectangle box to represent that zone as a resistance zone, meaning if price enters into this zone, as long as it's within this zone, we're expecting a reversal. Even if it's just the tip below or the tip above, anywhere price touches within this zone, we're expecting the possibility of a reversal on price. Now, the same thing also happens at support zone. You can see here we have a low. This other low is close. This other one is closer to the second one. We have support zone. So that is why if you look on the chart sometimes, maybe you're watching videos on YouTube or Instagram, you will see support and resistance being represented with rectangle boxes, which indicates it's a zone. Now, this is what an example of support and resistance that is very, very close to what you will see on your MetaTrader, 4 or 5, either on your desktop or even on your mobile device. Now, in this example here, we can see price making a first high over there, then a second high. You can see that the second candle did not break above. Now, if this candle had closed above this level, we will have seen that the resistance is invalidated. But then price closed exactly on the same line as the previous one, forming a resistance from where we can look at selling downwards. Now, take note, I'm only giving you something hypothetically. There are still entry strategies, but what this is showing you is the potential direction of price after hitting support or resistance levels. So price hit the resistance the third time. You can see there was a downward movement, a retracement, and a further continuation downwards. And the same thing also, price hits a previous support, and you can see a bounce to the upside. All right, so here's a concept, how support and resistance level can be broken. Support and resistance level can be broken. Now, we should note something. The higher the time frame, the stronger support and resistance levels are. Meaning, higher time frames like weekly, monthly, let me say daily, weekly, monthly, they can override the lower time frame. The support and resistance levels, they are stronger on the higher time frames compared to the lower time frames. Now, when you're looking at the concept of support and resistance, I will advise you ignore smaller time frame like 1 minute, 5 minutes, and even 15 minutes time frame. If you have to use support and resistance, the least time frame that is acceptable is from 1 hour. Yeah, I know there are some extreme scenarios where you may still use 15 or 30 minutes, but it's better to just start from 1 hour. But then 4 hour overrides 1 hour, daily overrides 4 hour, weekly overrides daily, and biggest on MetaTrader is the monthly time frame. On some other charting platforms like TradingView, you can even see support and resistance, on a yearly time frame, that's 12 months, 3 months time frame, 6 months, 1 year, and so on and so forth. Now, in the example on the screen, you can see that price hit a support. We have a perfect looking support here. Price touched the same level the first time. This came very close. So this is the third time. Now, price returned to that level, but then price broke below the support. So support and resistance can be broken. Now, when price breaks a support level, what happens is that it retraces or it retests. It retests the previous support as a resistance from where price continues selling downwards. And this is a powerful trading strategy. Don't forget the title of this webinar is How to Trade Smarter Using Support and Resistance for Profit. What I'm showing you is a very, very powerful strategy. Price breaks support, retest it as resistance, you make your entry, and then you see price crash literally downwards. So this is just another picture showing that you can see this is the support level. Price broke support, retest the support and resistance. Then from there, you can generate a sell signal to the downside. Again, at a resistance level, price breaks a resistance to the upside, retest the resistance as a support from where you can generate a buy trade to the upside. So we have further examples here. We have an established resistance. Price is in an uptrend, makes or hits the old resistance, retraces, price breaks the resistance, retest the resistance as support from where we can see a continuation to the upside. Like I said, these are trading signals. Yes, it's a strategy that can generate high probability signal that will lead to profit for you. Here's another example. You have an established resistance, an established support. Now price bounces off from there, breaks the old resistance, retests it as a support from where a buy signal was generated. Also, here we have a valid resistance, a downward movement after the resistance, price breaks the resistance, retests the resistance as support, a buy signal. The price moves around to hit that previous support. From there again, another buy signal to the upside. Now, when drawing support and resistance, we should take note about the candles. The shadows are also very, very important. And this is one of the areas where we actually use the rectangle boxes. But what you're seeing on the screen, if you're drawing your support and resistance, it's good to capture the shadows of the candles, like it's done here, to effectively identify the support zone or support level from where price, bounces to the upside. All right, that will be all from this webinar this afternoon. Now, there'll be a continuation of this webinar on Wednesday. That's when we'll have the full practical session on the chat. Now, I don't want you to miss that session, so plan to be a part of it. So if you have any question from what I've taught so far, the floor is open. You can go ahead and type in the comment section, and I will surely attend to you. Any question? While we're waiting for the question, don't forget tomorrow is our physical training session at our two locations, Abuja and Lagos. If you're based in Abuja and its environment, you live at Yanyan, you live at Karo, and other areas in the outskirts of Abuja, find a way to our office, PU Prime Africa, Walk and Connect Building, 50, a B2 Ukiwe Street, Jabi, Abuja, by 11 a.m. tomorrow for physical training session. And if you live around Lagos and its environment, you live at Yadopaja, Surulere, Mowe, and other parts of Lagos, you can find a way to our Lagos office at PU Prime Lagos, Agos Executive Business Launch at 54B Adeni Jones Avenue, Ikeja, Lagos. Time again is 11 a.m. Now, we're all physical training 2 times in a week, Tuesdays and Thursdays, and we'd love to see you at these two locations. Yes. Okay, it's like somebody was unmuting his or her mic to speak.
Good afternoon, sir.
Good afternoon, Mr. Dauda. You can go ahead. Hello, are you still there?
Yes,
Okay, your network is not stable. I can barely hear you. Can you go ahead and
the
type?
webinar, sir. One
Try.
is that on. Hey, can you hear me now, sir?
Yes, it's better.
Okay. If I want to type, it will not straightforward. That is it. By identifying the support and resistance on a
Yes.
trend, we have support. We have a uptrend, downtrend, and ranging market.
Okay.
But according to what I learned before, in an uptrend, I don't know if it is right too. In an uptrend, the support is at the down, while the resistance at the up, which is the ceiling. On a downtrend, the support is at the up, the ceiling, while the resistance is at the down, which is the floor. I don't know if I'm not mistaken.
No.
Is it true or
Mm-mm.
okay?
Whether uptrend or downtrend, resistance is up, support is down. Except a scenario where a resistance
Okay.
turns support and support turns resistance. But on the normal way to explain support and resistance, we say that resistance is like a ceiling. There's no out ceiling without the floor. Whether in uptrend or downtrend, like I said, except in a scenario where support turn to resistance or resistance to support. Generally, resistance is up and support is down. So if you want to explain it that way, you get yourself confused. So just stick with the normal way. Resistance is
Okay.
always up and support is always down, except in a scenario where resistance turns to support or support turns to resistance.
Okay, I understand you clearly now. My second question, sir. Can we use support and resistance? When the support or the resistance is break on the
Okay.
structure.
All right.
Now it came to retest the support or the resistance level. Can we use it to enter trade without chart pattern or candlestick pattern?
No. And that's why I said
Okay.
that what I'm teaching you is just to identify support and resistance for direction. I mentioned that
Okay.
strategy, there's still a perfect strategy that will give you high probability entry. So combining support and resistance with candlestick pattern, I tell you, is the bomb. So if price hit a support and you can find a candlestick pattern, maybe like a doji, a rejection candle,
Yes.
an inverse head and shoulder, double bottom, perfect, then that can launch you into a buy trade. So the support and resistance is primarily for direction. Because if you find your support and resistance on a higher time frame, like daily time frame, for instance, you can't make entry on the daily time frame. You need to still come down to a lower time frame, like 1 hour. So the 1 hour, those are the things you're going to be looking out for. You're looking for chart pattern or candlestick pattern, or probably a break of trend line. Those are things that can give you clearer entry. But the valid thing is support and resistance is there to guide you as to the overall direction where the market is expected to go to.
Okay. Thank you, sir. The third question, sir. What is the best time frame to identify support and resistance if I wanted to trade on 1 hour? That is day trading.
Okay, if you want to trade on 1 hour, I will advise you stick with daily time frame. Now, the support and
Okay.
resistance should always be on a higher time frame compared to your entry. Now, that is simply what top-down analysis is all about. You are trying to get direction on the higher time frame and make entry on a lower time frame. So if you want to be trading on 1 hour as your entry, then it's better to look for your support and resistance on daily time frame. Now, if daily time frame is a bit big for you, you can still come down to 4 hours, but make sure that you are using the higher time frame to identify your support and resistance.
Okay, sir. Thank you, sir.
You're welcome.
The other question I want to ask is on mobile device. Don't be annoyed. My question is too much. On
You're
mobile
free.
device,
Ask as many
like
questions. That's why I'm here.
I'm getting it confused to get a rectangle shape to identify support and resistance. But I used to use like two horizontal line, if I'm not mistaken, two line where it
Okay.
starts, where I start from the beginning and where I think it stops. But I don't know if there is a way or it is not present on the mobile device.
No, it's present. Unfortunately, I can't share my screen for my mobile device now, but it's there.
Okay.
That's why you may need to use the rectangle tool, the rectangle box tool. It's there on the uh it's there on the MetaTrader. It's there on even on the mobile. But if you are finding it difficult, you can as well use the horizontal line tool, like you said, to identify your support and resistance. You can use that.
Thank you, sir.
You're welcome.
Yes, sir. What time is Wednesday webinar, sir?
Same time, 4 p.m.
Okay, sir. Thank you, sir. Thanks
You're
for the
welcome.
answering questions, sir.
You're welcome. Stanley, please, are we getting the recorded version? Yes, you are getting it. Just shortly after the end of this meeting, I'll post the link to the recorded version. All right, Temitope is asking, how do you know a valid support and resistance? On which time frame should we draw it? I think I already answered that question. A resistance level is an area where price has not broken out above the previous high, and support is one where price has not broken out below, the previous low. And time frame, which time frame? Like I said, it's better on the higher time frames, daily, weekly, or maybe 4 hour, but it should be higher than the time frame you want to use for your entry. So that's what is important. But then I said you should avoid smaller time frame like 1 minute, 5 minutes, and even 15 minutes. All right, so that will be all. I think I've responded to everyone. So we're ending the webinar right here. Take care, trade safe, and I'll see you some other time. Bye for now.